Okay. All right. So before I start, let me just share my screen. Okay, before I start, a little bit of disclaimer. Okay, as what you can see, the content basically provided is for educational purposes only, and it's not financial advice here. It reflects the speaker's my view at the time of publication and may not account for your individual risk tolerance, financial situation, or investment goals. Okay, additionally, what I want to say is okay, you got to conduct your own analysis. Okay, remember, always conduct your own analysis. Okay, you use proper risk management like stop loss orders. Okay, and consider waiting for the market to stabilize later. Okay, whether on Sunday or Monday. Okay, last piece of advice. Okay, past performance does not guarantee future results. Remember that? Okay, so now let's begin. Wait, before that, hi. Okay, so I'm gonna start off with dollar index outlook. Okay, basically overall it is bearish risk play out. Okay, the US dollar index continue its downward move. Okay, the weakness basically likely followed by renewed concerns over Trump's tariff policies. Okay, so he was basically trying to lock as much as possible tariff with all the countries that US had business with. Okay, and currently Trump's tariff policies is under review by the US Supreme Court. Okay, so adding to the pressure, Challenger, Gray, and Christmas Incorporated reported, 153,000 job cuts in October, citing AI-related restructuring, slower consumer demand, and also higher business costs. Okay, the data weighed further on sentiment, pushing the dollar index down to around 99.41. Okay, several Federal Reserve officials spoke overnight. Okay, Musala mentioned that rates are nearing neutral levels, while Goolsbee stressed the need for more data before considering any cuts. Max, however, remains focused on inflation risk rather than the labor market. Okay, this mix of views, combined with worries about employment, led to a pullback in US equities. Okay, the market also paid close attention to the Supreme Court hearing on the legality of Trump's tariff, which were imposed under the International Emergency Economy Power Act. In short, is EPA, IEEPA. Okay, some conservative justice questions whether such tariff were constitutional, noting that taxation authority lies with Congress. Okay, if this tariff are overturned, it could lead to refunds for affected businesses and potential ease inflation pressures. Okay, giving the Fed more flexibility to adjust policy later on. So overall, the USD, the dollar, remain under pressure with traders watching closely how the tariff ruling, government shutdown, and upcoming labor data unfold. Okay, so that's about dollar index. Okay, sorry. A little bit. This time I'm gonna start each of the Forex pair or the currency pairs with a bit of fundamental first. Then we go into technical, yeah? Okay, so let's move on. Okay, next we have euro dollar. Okay, basically, euro dollar pair extended its rebound. Okay, trading around 1.1545 as the dollar continued to weaken. Despite the lift, okay, the euro remains technically oversold and traders are watching closely for signs of stability amid ongoing political and economic uncertainty in Europe. Okay, in France, political risks continue to weigh on sentiment. Following S&P's downgrade in mid-October and Moody's decision to maintain the AE3 rating, but shift the outlook to negative. Okay, pressure remains on the French government. Prime Minister Le Cornu narrowly survived a no confidence vote, but his ability to push through the 2026 budget remains uncertain. Okay, he may be forced to invoke Article 49.3 to bypass Parliament, something he had previously ruled out. Okay, this political gridlock risks prolonging France's governance paralysis, okay, which could undermine confidence in the euro. On the policy front, ECB President Christine Lagarde commented that the central bank's stance is not fixed, suggesting that future move will remain data dependent. Okay, market are interpreting this as a wait and see approach, consistent with our view that the ECB is unlikely to cut rates further in 2025. Okay, the central bank also acknowledged that current rates are near the neutral level. Okay, and that higher fiscal spending, particularly on defense, could leave that neutral rate. Okay, while some Wall Street banks have turned bullish, projecting euro dollar could reach 120, amid diversification away from the dollar, we remain cautious. Okay, so basically, what I am saying here is that even though the price, all the banks has turned bullish, on euro dollar, we still remain cautious, okay? Because French political risks, the ongoing war in Ukraine, and the threat of US pharma tariff, okay, remain underpriced and could easily derail the bullish narrative. Okay, so now I'm going to open the chart and let me share the screen. Okay, now I'm sharing the screen. Okay, so this is the euro dollar chart. Okay, it's a daily chart. Okay, and I put an indicator Bollinger Band. Okay, the red lines are the resistance level. Okay, and the blue lines are the support level. Okay, as of looking at daily charts, okay, daily candle charts of euro dollar, it has rebound from this downward, but basically price data is still in the bearish area. Okay. So my anticipation, if tomorrow market opens and the candle close into the bullish territory, then it could be heading towards the resistance ones, which is 1.16530, and the second resistance level is 1.17054. Okay, but if let's say the candle remains okay in the bearish territory or bearish area of the Bollinger Band, okay, so it could be heading first to 1.14797, okay, which is also confluence with the Bollinger Band's lower line or lower band line, yeah. Okay, so then the second support level to watch is 1.14017. Okay, so that's technically. So in short, okay, while the euro's rebound looks promising, okay, traders should stay cautious of whipsaw movements driven by the French political uncertainty. Okay, so that is something to watch out. Okay, so tomorrow is good. Perhaps we can have the euro dollar into your watch list. Okay, so next, let me stop sharing first. Okay, then next, we have pound dollar. Okay, pound dollar, basically as standard, it rebounds to around 1.31584, supported by broad US dollar weakness, through the pound remains in oversold territory. Okay, the move comes after a volatile week driven by both fiscal and monetary developments in the UK. Okay, the Office for Budget Responsibility, OBR, recently downgraded, the UK's productivity forecast more than expected. Okay, leaving Chancellor Reeve facing a sizable gap in the upcoming budget. Okay, meanwhile, the Bank of England, BOE, kept interest rate unchanged at 4%. Okay, so by not increasing interest rate, okay, it give a little bit calm, okay, to the market, to the sentiment. Okay, with the vote where Governor Bailey cast the deciding vote. Okay, the BOE noted the inflation likely peak at 3.8% in September, opening the door for possible rate cuts in the coming months. Okay, market pricing now reflects roughly about 67 chance of a December rate cut. This is November. Next month is the important months. Okay, next. Let me continue. Okay, the BOE also rising unemployment and slowing growth. Okay, and Bailey encouraged the government to cap regulated prices, okay, such as utilities and transport, to help ease room for future monetary easing. Okay, according to the central bank's is really nearby already. Okay, it's already holding back business activity, with demand unlikely to pick up until mid 2026. Okay, she may attribute the fiscal gap lingering effects. Okay, while some analysts see the UK's fiscal risks as overstated, pointing to stable debt levels and improving deficit outlook, we view the current risk fairly priced and remain cautiously optimistic on the pound. Okay, so let's see what's pound to dollar. Okay, so this is pound to dollar on a daily chart, yeah. Okay, so again, the red lines are the resistance level and the blue lines are. Okay, so I mark my first support level is around area 1.32945. Okay, and resistance 2 is 1.34316.
Anissa, we cannot see your screen.
Oh, yeah.
Thank you.
Okay, there you go. Okay, so this is pound dollar on a daily chart. Okay, pound dollar on a daily chart. Okay, the red lines are the resistance and the blue lines are the support level. Okay, the first support level is at 1.30189, being the latest lowest price. Okay, and the second support level, 1.28857, is actually a strong support level. Okay, pinning back all the way from 23rd October. Okay, as you can see, it has been tested 3 times here. Okay, this is a false breakout. Okay, and it has hold still remain above the second support so far. Okay, so if let's say tomorrow candles, go up and close into the bullish territory, then we could look forward change of trend. Okay, so that is on pound dollar. Okay, so but keep in mind, okay, overall the pound's recovery remain underpinned by expectations of a more measured BOE stance and improving fiscal clarity. Okay, but you should stay alert to budget headlines and shift in rate expectations that could drive near-term volatility. Okay, so we'll see what are their budget headlines like. Okay, so moving on to dollar Swiss, yeah? Okay, dollar Swiss, a little bit on the fundamentals first. Okay, Switzerland's attempt to reduce the 39% US tariff on its goods has reportedly led to an offer to invest in US gold refining. Though trade negotiations remain uncertain, any escalation in pharma-related tariff could weigh on the Swiss given the Switzerland was the second largest pharmaceutical exporter to the US in 2024. Okay, Swiss National Bank, SNB, okay, do not expect any further rate cut this year, unless their inflation turns negative, but not our base case. Okay, so let me open the charts. Dollar Swiss. Here it is. Okay, as you can see, this is the highest point in this chart. Okay, so sharing my screen. Yes. Okay, here it is. Okay, so this is dollar Swiss hourly chart. Okay, let me change to daily chart. Yeah. Okay, currently it's at the bottom. Okay, it formed a little bit of a base or sideways. Okay, at the bottom. Okay, so when we see this at the bottom, okay, this could mean that there's no more seller, okay, and buyers start to come in. Okay, what we want to look at is, okay, what we want to see is that the current price remain in the bullish territory with volume coming in, okay, and as it attracts more buyer, okay, once it's breakout, then it go up further. Okay, it'll be as high as from the distance of 0.81399, okay, to the distance of 0.7825. Okay, that's the height, the distance you expect it will travel to upwards. 4. So meaning it could be heading towards, okay, if break out the upper red lines, yeah? If break out upper red line, then it could be heading towards the 0.85 area. Okay, so that is on dollar Swiss. Okay, let's move on to the next pair. Okay, dollar to yen. How many of you trade dollar to yen? Please type in. Okay, type 1 if you trade dollar to yen. Oh, Gary is. I bet, Gary, you trade everything, right? Okay, only few. No worries, no worries. Okay, let's look at the chart, yeah? Okay, daily chart. Okay, the major trend is up, basically. Okay, with the with the recent activity, with the recent increase in volatility, okay, because the trend line has grown steeper, okay, and the current price is in the bullish territory, which means this uptrend could continue further. Okay, Siko, okay, you want to check if my setting of the Bollinger Band is default. Yes, I just use default. Okay, what I change is only the thickness of the line so that I can see clearly. Okay, so that's on dollar yen. So that's on dollar yen being bullish. Okay, fundamentally, basically, okay, okay, fundamentally, basically, the pair continue to test the key 153 support, okay, and a clear breakout this level would likely require further decline in US yield or stronger signals from the BOJ fiscal years. How to use Bollinger Bands? Okay, let me show again. Okay, first you go to Insert. Okay, and then second, you select Indicators. Okay, and then third, you bring your mouse over to Trend and then click on Bollinger Band. Okay, and then parameters are the same. You don't change except for colors if you want and the thickness if you want. Okay, levels, nothing changed. Visualization, I pick all time frame, easy. That's it. Share screen. Okay, yes, can. Okay, so again, on your chart screen, on the trading screen, okay, on the top row menu, click on insert, okay, and then bring your mouse over indicators, okay, and then select trend, okay, and then click on Bollinger Band. Okay, there you go. Okay, again, insert, indicators, trend, and Bollinger Bands. Okay, once you click, okay, it come out, this menu will pop up. Okay, you don't change any setting on the parameter, okay, but you can change style of the color and thickness if you like, okay. That's all I change. Okay, and then visualization, okay, you just take all time frames and that's it, and you click OK. How to interpret? Okay, Yi, I'm gonna explain. I usually explain how to use the Bollinger Band during my coaching session. Okay, but today I'll focus on the market updates. Yeah. Okay. So this is dollar yen. Okay, I'm gonna move to the next pair. Okay, next pair we have Aussie dollar. Okay, so the Aussie dollar remains underpinned by the RBA Fed policy divergence. Okay, the Reserve Bank of Australia, RBA, yeah, okay, kept its cash rate unchanged at 3.6%. Okay, citing that while inflation has ticked higher, okay, the pressure appears tentative. Okay, much of the recent increase was attributed to the end of electricity rebates in several states. Okay, and in its statements of monetary policy, the RBA projected just one more rate cut in 2026. Okay, while acknowledging ongoing uncertainty around whether current policy settings remain slightly restrictive. Okay, this suggests that while there may be some room for another cut, future move will stay data dependent. Okay, data dependent means they're going to see what's the data look like. Only then they decide whether or not to cut more or not to cut. Okay, so let's go to the technical. Let me share my screen. Okay, let's look at the Aussie dollar. Okay, so this is the Aussie dollar. Insert indicators trend, Bollinger Band. Okay. Okay, it is at the bottom, yeah. Okay, as you can see, there's no more lower low. Okay, you can mark at to use at the body only or to mark the area from the end of the tick. Okay, I just like to use the body because that's the real data. Okay, and then the upper band area. Is here. Okay, so this is the sideways area. Okay, so current price, as you can see, the last white. Okay, as you can see, okay, the last candle, okay, this second last candle has managed to close outside the band and retrace a little into the bullish area. Yeah, this is 1 hour chart. Okay. Okay, let's look at the daily chart. Okay, while daily chart, okay, the candles has just take a dive into the bearish area. Okay, but it's green. Okay, so these two candles are not engulfing. Okay, they are more like harami. Okay, so it could be continue further. As for now, this is the area. Okay, support area would be the lower band line. Okay, let me change the color to no. Okay, so that is the immediate support. Okay, current price is 0.64934. Okay, so the support area is 0.64521. Okay, that is support 1. Okay, and then support 2 is baseline. Okay, 0.64188. That is support 2. Okay, so if let's say the candles or the price, okay, move downward, so these are the level that you want to watch out. Okay, so that is Aussie dollar daily. Okay, for daily chart, we can move the resistance to okay, so resistance 1 is 0.65155. Okay, that is the moving average line of the Bollinger Band. Okay, and then the second resistance line, okay, is 0.65828, okay, being the previous peak, okay. So technically they are in a sideways, so not a good one to put in your watch list, okay. All right, so I'm going to move to the next currency. Okay, we'll be looking at the Kiwi dollar. Okay, for the Kiwi dollar, we remain constructive, okay, on the Kiwi dollar over the medium term, okay, expecting a gradual recovery once market sentiment improve. Okay, supporting this view, okay, Reserve Bank of New Zealand, RBNZ, Governor Hobbs-Bye, recently commented that the rise in unemployment to 5.3% in Q3 was in line with expectations. Okay, and he expressed confidence that things are going to get better from here, and encouraging signal for the domestic outlook. Okay, so let's open the chart. Kiwi dollar. Okay, here it is. Hang on, I got to. Okay. So this is Kiwi dollar. Okay, Kiwi dollar has in an obvious downtrend. Okay, so this is the highest peak. Okay, and it has recently picked up a really strong downward momentum. Okay, can you see how steep it went? Okay, and it got even steeper. Even steeper. Oh my God, okay. So, and then, okay, candles being closed outside the band. Okay, number one, it is an indication that this downtrend could continue. Okay, so perhaps you can take a shot. Okay, so over this pair, being likely, okay, your entry could be around area. Okay, let's say it corrected to around 56554 to 56650. Okay, so that's your entry level. Okay, and then because we short, so your target is okay 0.55403. Okay, so Kiwi dollar, you can try to short. Okay, it will correct, it will rebound a little bit. Okay, so that's why I'll wait for an entry around this area, 0.56650. Okay, and with a target of 0.55403. Okay, if let's say it rebound and hit the middle line of the Bollinger Band, which is the moving average, 20 days. Okay, so that would be my stop loss level. Okay, so that is for Kiwi dollar. Okay, that pretty much all those major pair. Okay, that I showcase and share with you a little bit of their fundamental news here. Okay, so that's all the time we have for today. Okay, I hope it really benefits you. Okay, and helps you with your trade next week. So all the best. Bye bye.